In a market full of hyped up stories, sometimes the real picture is found in the numbers that get ignored. We're talking about a company that has been a market darling, but is now showing signs of significant strain. That company is Tesla. And today we're taking a deeper dive into Tesla's recent Q2 2025 earnings, because the fundamentals right now are telling a very different story from the vision. One of weakening demand and eroding profitability that every investor needs to understand. Now, Tesla's Q2 2025 earnings on July 23rd were complex. On the surface, the company reported revenue of $22.5 billion and an EPS of 40 cents, which marginally beat or met analyst predictions, but the real story lies beneath the headlines. See, despite the sequential uptick from Q1 this past quarter, Tesla's vehicle delivery saw a stunning 13% year-over-year decline. That's right, a double-digit decline. This isn't a minor blip. It's a significant indicator of slowing demand in their core automotive business. The market's subdued reaction, with a slight dip in the stock price, shows that investors are looking past the headline beats and are zeroing in on this massive red flag. For a company that once boasted massive margins, we're now seeing a troubling trend of compression. Tesla's gross profit margin for Q2 was simply 17.5%, a steep drop from its historical highs, and the net profit margin for the quarter was a mere 5.21%. Now, at this point, the leader in EV will be the company that can do it the cheapest, and that is not a good business. Now, this isn't just a quarterly anomaly. This is a consistent downward trend that analysts are calling out. The company is facing significant pressure from increased competition, especially BYD, pricing cuts to move inventory, tariffs, and a reduction in high-margin regulatory credits. Now, looking at the chart here of Tesla, we're on a daily, and the stock has been well off above its highs. We had the highs around 19th of December of the last year when we had that increasing upside, when we saw Elon Musk and the president joining together. After that, the stock declined around 54% and hasn't been close to the highs at all. Currently, the stock is underperforming the overall market and has been pretty much sideways. If we kind of analyze here the stock from the swing high anchored VWAP here or the sellers that came in, we are above it now, but we are seeing that each time we encounter resistance at this key area here of $356 with 65 cents. Now, something that's positive for the stock though is that if we see here on the overall market, now we've been seeing that the stock saw a bullish crossover, right? And what that means is that the 50 EMA, this yellow line, went above the 200 EMA, which shows that overall investors are partly bullish on the company, but we haven't seen intense upside growth. For some reason, we've been consolidating around this key zone here. We've been seeing lower highs around this zone, but still higher highs, which shows maybe a contraction here. And we're seeing that the price action, although right now is looking bullish, the stock is having a very difficult and hard time to get above 356. If you look now at our hourly chart, the stock has been bullish ever since it went above this $321 level. And you may be asking why. Well, it was short-term resistance, and the stock actually found a dip today and actually bounced back. Although the company does have, for the moment, upside potential here on the price action, the longer-term fundamentals are not sustaining so far an investment thesis. If you look here, the overall fundamentals, we can go long the company here for a short-term day trade or even a swing trade. We have price targets on the company towards the highs of $356 and towards $400, but I do not believe the company is set up for a longer-term investment. Instead, is more of a swing trade or even a day trade here for the company. Traders and investors, the evidence is compelling. The year-over-year decline in deliveries, the crushing of profitable margins, the negative free cash flow, and the bearish analyst sentiment all tell a unified story. Tesla is facing a major crossroads. The stock's current valuation seems to be pricing in a level of future growth that the present fundamentals are actively contradicting. We believe that while the long-term vision is there, in the near term, the smart money is exercising extreme caution. As always, remember that the market involves risk. Never invest more than you can afford to lose, and always do your own research before making any investment decisions. As always, feel free to subscribe to the channel and let me know down in the comments your thoughts on Tesla's Q2 report and whether you're bullish or bearish on the stock.